Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Cybersecurity Awareness Month, which takes place every October and now in its 19th year, is a collaboration between government and private industry to raise awareness about digital security and empower everyone to protect their personal data from digital forms of crime. And it is great to have with us, we have Mark Marex. He's Director of Index Research and Development with Nasdaq Investment Intelligence. He's going to discuss the structural tailwinds in the cybersecurity space. But before we get to that, Mark, let's talk about an index that gives investors exposure to companies within the cybersecurity space.
Thanks, Jill. Pleasure to be here with you as always, and especially in October, as you know, we do our part at Nasdaq to bring attention to this really crucial space. Let's kick it off by talking about NQ Cyber. That's the ticker for the Nasdaq CTA Cybersecurity Index. CTA, of course, being the Consumer Technology Association that puts on, among other things, the CES in Las Vegas every January. We've developed a number of thematic tech indexes with them, and they very closely contribute research and to the maintenance of this index, which tracks really, all of the heavy hitters in the cybersecurity space. Names like CrowdStrike, Zscaler, Fortinet, some of those pure play cyber specialists, as well as names like Cisco Systems, Broadcom, Palo Alto, and even Booz Allen Hamilton, names that do other things besides cyber, but also have a really strong presence in the industry, whether it's from a firewall perspective, software, active threat mitigation, or even defense consulting. So if you look at the performance of this index year to date, as of the end of the third quarter, was down a little bit over 23%, slightly outperforming what we saw with the S&P 500, which was down about 25%, and really pretty materially outperforming the Nasdaq 100, down 33%. And then the last one there, the NDXT in purple, is the tech sector part of the Nasdaq 100, down about 40% year to date. The reason I'm showing that last one especially is to kind of set up this argument that we're making based on data that we've been analyzing for most of this year that really seems to suggest cybersecurity should be treated as a wholly separate industry within that whole thematic tech framework, which investors tend to view as a monolith, that it's being kind of very high growth, not fundamentally strong, the kind of ARC complex. I would argue there's a lot of evidence to support that cybersecurity, given all the developments, not just within industry, but also in the regulatory and geopolitical space, is much more like a classic defensive sector, like aerospace and defense, and maybe even utilities added in there as well, in terms of how it's behaving. The fact that it's outperforming parts of tech quite substantially this year, I think really supports that notion to think of this as more of a defensive index within the thematic tech space.
And Mark, what about the fundamental strength across the index constituents?
Yeah, so we've been looking at this from a variety of angles. The simplest way to look at it is when you look at all the constituents in the index, there's 37 of them. In aggregate, their revenues for this year, now that we've got 2 quarters of earnings seasons behind us, in theory, a lot of confidence in how the second half of the year is going to play out as well with all the updated guidance. In aggregate, the companies in this index are expected to grow their revenues by 9% this year. That's a pretty strong outcome when you're seeing a lot of parts of the equity market, especially within tech, start to see top line growth flatten or outright decline this year versus last year. And when you go by index weight and you look at companies, company by company, that are forecasted to grow revenues, it's 31 of the constituents. 90% of the index weight is tied to companies expected to grow revenues this year, versus only 3 that are expected to shrink revenues this year, only about 6% of the index weight. There's a few percentage points that we just don't have forecasts for, but safe to say the vast majority of the index is still on a growth trajectory this year. And when you look at the right-hand side of this page, we do that same analysis for earnings, but we break it down a little bit differently. We break down the rising earnings growth into those that are really fast growing, where earnings are going to go up by more than 100% this year. That's about 57% of the index, 15.5% of the index weight. And then companies that are growing a little bit slower than that, but still growing their earnings, is 56.7. So about 3/4 of the index weight is tied to companies that are expected to grow earnings. In aggregate, we're getting 8% earnings growth. There's still a portion of this index that has negative earnings. And that's kind of to be expected when you look at the number of IPOs that have taken place in the last few years. It's going to take some time for those companies to get earnings positive, but overall, right, by and large, the story here from a fundamental perspective, whether you look at earnings, revenues, or things like cash flow and margins growth this year, it is a very, very solid story, and something that investors, again, should pay attention to before they lump this into the same category as some other parts of thematic tech.
And finally, Mark, let's wrap here with the tailwinds for the industry that we can be seeing even in the face of a recession.
Yeah, so what I'm showing here is a quarterly survey that Morgan Stanley and AlphaWise put out. This is looking at chief information officers of large corporations in the US. And the story for the last few quarters for these surveys has been very, very consistent. That security spending is the most defensive category of product, and that it's one of the few areas that are expected to grow next year in terms of spending. And it's also one of the last, if not the last area to get cut in terms of spending if we do end up having a recession. And that comes from, really many factors, one being the fact that there's been a big regulatory push this year, especially in the face of, the geopolitical conflict out in Ukraine, with cyber warfare kind of hitting the headlines more and more, and people getting attuned to the fact that there are cyber risks really in every industry and in every part of government. So there's a big regulatory tailwind. There's a big industry tailwind when you look at the fact that, most corporates, most enterprises have adopted a zero trust approach, which basically means they're going to monitor everything inside their networks, regardless of whether there's a good firewall or not. And the fact that cloud is very, very early in its migration stage. We're only about 10% of the way there from on-prem IT to a full cloud environment migration. There's just a ton of structural tailwinds for this industry. And again, things like this survey really show that even if we do get a recession and a lot of parts of growth and a lot of parts of tech end up declining during that, this is one of the few areas to pay attention to in terms of being a bit of a safe haven, a bit of a defensive play.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.